So, guys, this is the live market here, as you can see, and those are going to be my trades for the day. This AUD USD trade right here, I want to sell it from this area right there, and then this Euro USD trade as well. Now, I'm going to let Future Roy do all the explanations. However, I just wanted to show you the trades before they're actually triggered in. So, let's see how they go.
Hello everyone, this is Roy from the future, here to explain to you what happened with those trades, technically as well as fundamentally, and explain to you what I'm waiting for to happen on Bitcoin and Euro USD in the next few days. Now guys, let me start by giving you a small fundamentals course. Now guys, what's been happening in the past few months is that the Federal Reserve have been raising interest rates. The reason why they've been doing that is to combat inflation. And you might ask yourself, how does raising interest rates help us in combating inflation? The way it helps us is that when we raise interest rates, people rush to the banks to put their money in the banks and they borrow less. Because of course, interest rates are higher, you're better off putting your money in the banks and earning more interest than borrowing from the banks and paying more interest to them. So if you're borrowing less, it means you're spending less. It means you go and buy less stuff. And when you do that, the demand for the stuff, it goes down. And when the demand for products goes down, what happens is that prices go down with them. So this is why we usually raise interest rates. So you might be asking yourself as well, why don't we keep raising interest rates indefinitely to just combat inflation and bring inflation to zero? Because when you raise interest rates, as I said, people borrow less, so they spend less. When they spend less, businesses get affected, so the economy gets affected. People invest less in the stock market, which causes the stock market to crash, as what's happening right now for the past few months, because people are spending less because inflation is up and the Federal Reserve keeps raising interest rates. So raising interest rates, as I said, has advantages and disadvantages. The advantages is that it pushes inflation down. The disadvantages is that it messes up the economy. So we've been waiting for just a small hint. And by the way, I just want to add something, that when you raise interest rates, you give strength to the currency in which you're raising interest rates in. Because when you raise interest rates, people tend to buy that currency to save money in that currency to earn more interest. So raising interest rates in the past few months have been pushing the US dollar into strength and pushing all the opposite pair down, like Bitcoin, the Euro, and all that stuff. Now, for what happened is that a few days ago, the United Nations, let me share my screen here. What happened is that the United Nations calls on Fed, other central banks, to halt interest rates increases. So the Federal Reserve and other central banks risk pushing the global economy into recession, followed by prolonged stagnation if they keep raising interest rates, a United Nations agency said Monday. So what happened here is that the Federal Reserve, at the United Nations warned the Federal Reserve that if you keep raising interest rates, you're messing up the economy, you're going to cause us to go into a recession. So we got like a small hope that maybe the Federal Reserve will be like decreasing interest rates instead. So what happened is that we got this small pump right here on Bitcoin, because we got this hope maybe they'll decrease interest rates, which will push all the opposite pairs up. So we got this push in Bitcoin right here. However, guys, what happened here? What happened here is that OPEC got together right there, and they decided to cut oil production by 2 million barrels per day to shore up prices. Now the oil prices, if we go and look at them, hopefully, so let me choose this, and if you go and look at oil prices, not this one, crude oil, you'll see that it's been pushing down for a while now. When they took that decision, look what happened. We started seeing some bullishness in oil prices. So they wanted to raise oil prices up, and what they did is they cut oil production by 2 million barrels per day. Now, how does this news affect us? When they raise oil prices, when they cut down the oil production, which of course causes the oil prices to rise because the supply is now less. So when the oil prices rise, what's happening is that the inflation goes up. The reason why inflation goes up is because energy cost is now higher. Gas prices will go up, and all that stuff will happen, which will cause the inflation to go up. And as I said in my small fundamental course, guys, if the inflation goes up, the Federal Reserve will have to raise interest rates to combat inflation. So the hope that they will decrease interest rates was gone, and what Bitcoin did is it started pushing through to the downside here. Now, as Bitcoin started pushing through to the downside, we can imagine that EURUSD as well will start pushing through to the downside. AUDUSD will start pushing through to the downside. So basically, all pairs opposite to the USD will start pushing through to the downside. And this is why I've decided to sell EURUSD in the area that I've showed you that I'm selling. What happened is that the market wicked through my entry right here and then pushed through to the downside to trigger my take profits, as you'll see somewhere on the screen right now. What happened with AUDUSD is that simply the market kept pushing through to the downside and didn't trigger me in. So what I'm waiting for, and I will explain this trade technically, guys, just give me a second here. What I'm waiting for in the next few days is that tomorrow there's inflation news in the US. So if the inflation comes up to be so high, it means that the Federal Reserve will raise interest rates because they need to combat that inflation. It means that euro, Bitcoin, all that stuff will fall. Again, Bitcoin might fall down to 16 to 17,000. Let's look at Bitcoin again. Yes, right there. It might fall down into these areas right here, take out all this liquidity right here through to the downside. The reason why that might happen is that inflation is up, so up because gas prices are going up, and they might also increase interest rates again. Now the interest rates decision is going to be in November, so we will know nothing for sure as to what their next move would be until November. However, the inflation news tomorrow in October 13 on Thursday is going to be very important in telling us what their next move might be, and we would know where the market is headed. I'll update you guys on my Instagram as well as on my Discord, so feel free to join them if you'd like to hear those news. Now, let's explain what happened technically with EURUSD and how was I able to enter on this trade. So let's understand what I was waiting for here on EURUSD. What I was waiting for here on EURUSD is, first of all, I decided my bias. And if you watch my TikTok, if you watch my Instagram, you know that what I do is I wait for the market to grab liquidity, to manipulate the market, and then I enter. So what I waited here to happen, my bias was down. I waited for the market to push through to the upside, and this happened during Asia. It pushed through to the upside, it grabbed all the liquidity above this trend line right here, above this high right here, and then it started pushing through to the downside where I wanted to enter here. Now, unfortunately, the market pushed through to the downside right here where I thought, okay, maybe I'm not getting triggered today, and then the market pushed through to the upside, grabbed these highs, this double top right there, and I entered and I left the market right here. Now I want to explain something to you guys about how the banks enter the markets. Now let me give you a small example by talking about real estate. All right, let's say that I go to some city and I decide that I want to buy 70 houses in that city. However, there's only 40 people selling their houses. So of course I'm not able to buy 70 houses because simply there is not 70 houses available to be grabbed. So what I do instead is I create some news, I create something that convinces people to sell more houses. So I create some news, for example, that the city will be like, there's a tornado that's going to come and it's going to destroy all the houses, and right now people feel like they need to move. They start selling their houses, and now I have those 70 sellers that I can buy their houses from. The same thing happens in the market. Whenever the banks want to enter the market, there is not enough sellers or buyers to sell from or to buy from. There is simply not enough positions. They can't open their MetaTrader, for example, and enter the market. They need to do something. They need to create something. So let's say the market is going through to the downside, all right? And the banks, they decide that they want to sell. Now everyone, as the market is going through to the downside, because everyone learns like a trade with the trend is your friend and all of that stuff, all retail traders and even some institutional and hedge funds, what they're doing is they're selling the market through to the downside. As the market is going through to the downside, they're selling with the trend. So there's more sellers than buyers. So if the banks, they want to sell the market, they can't. So what they do instead is they buy, because remember guys that there is more sellers than buyers, so they can buy from those sellers. They buy from those sellers, they push the market just a little bit up to convince them to start buying. Now when everyone starts shifting biases and starts saying, okay, the market just broke structure to the upside, it's going through to the upside and all of that, when they start doing this and they start buying, now we have enough people who are buying that we can sell to. So when we have enough people buying that we can sell to, what the banks do is they execute their orders and the market usually pushes through to the downside. Now remember, what the banks did is that they bought here to push the market through to the upside, and they sold here to push the market through to the downside. As they do this, they're profiting on that position and they're losing on that position. Remember that the act of selling here pushed the market through to the downside. So now they're negative on this and they're positive on this position that they opened here. What they need to do next is that they need to close this position right here in small profits. So what they do is they wait the market to go up just a little bit into just above the area as to where they previously bought. They close this huge buy, which means that they sell. When closing a buy, you sell, which causes the market then to push through to the downside here. So looking back at our example, look at that. The market was going through to the downside. That was the latest structure that was formed. This is a new day and the banks want to enter through to the downside. So what happened is that they bought, they pushed the market through to the upside here, grabbed all the liquidity above here where people started being convinced to buy, and we also hit the stop losses of those sellers right here where they were forced to buy. So we created a lot of buyers by pushing through to the upside and breaking this structure right here. As soon as we did that, they now have enough liquidity. They can open positions and sell the market through to the downside. And as you can see then, the market sold impulsively through to the downside after they executed their orders. Now remember that they bought a position right here to push the market through to the upside. So what's going to happen next is that they will wait the market to push above this area and they will close their original buy. And this is what happened. The market pushed above this area right here, pushed above this low, as you can see. And as soon as we pushed above that low, they closed their position right here, which caused the market to melt through to the downside and trigger my TP profit, so my TP area. So I've entered when they thought of closing that position, and I've exited just down here at 1 to 3 risk reward ratio after the stop losses of this double bottom right here have been taken. So this is everything that I want to say technically and fundamentally. I hope that was a good video for you guys. Let me know in the comments, let me know on my Discord, let me know on my Instagram DMs if you like those videos. They're very easy for me to create as they're about trading and it takes me like 10 to 15 minutes a day to do them. So of course I'll do them if you guys like them much. So let me know, subscribe, turn on notification, all that stuff that other people say, and see you in the next video. Good luck guys.